So, hello. How's everybody doing? Hope we're all having a great day. This is the 50 pips, 31st 2014. Not making any trade calls or recommendations because you're responsible for the trades you may decide to take. The fact that you're listening to this means you've read, you understand, you accept all the disclaimers on the blog, and understand that we're just performing some technical analysis in a learning context for educational purposes only. So, heads up. So, happy Labor Day weekend to everybody. Keep in mind that tomorrow is going to be a holiday or is a holiday in the US, so US markets are going to be closed. And basically, we're coming up to a very interesting week because basically we're coming into full-fledged into September. Flows should be coming back and the summer is officially over, right, in terms of trading. It's going to be a very interesting week because not only do we kick the week off with the China PMI, well, basically we got all the PMIs coming out early in the week, but basically it's a central bank week. We're going to have a rate decision from the RBA on Tuesday. We've got the BOC, Bank of Canada, on Wednesday. We're going to have the BOJ on the wires on Thursday, also having an ECB and a BOE rate decision on that Thursday, and then we close the week, the little cherry on top with non-farm payroll. So clearly this is going to be a very interesting week. Now, what's going on with the charts? Let's try and keep this short, sweet, and simple. So what's going on? Well, basically it's really big questions about what's going to happen with the dollar. I mean, let's start with some of the futures. So ES, basically that move we were discussing basically is for the final rotation back into the 2000 level is done and dusted. Now what we have to see is how this continues to trade. Now it's interesting because, also because of the way we closed on Friday, a lot of people were looking for a little bit of a retracement here. So that's going to be something interesting to keep an eye out for. Keep in mind that if you look at the monthly, actually closed very, very bullish. And it's pretty rare to see this completely die without trying to take a little stab higher. So again, in terms of the odds, in terms of a healthy move, it would be healthy to see some kind of a retracement. We're still completely in trend. Now, I don't have any targets to the upside. I'm just going to be looking at 2025s, 2050s. And, if you're trailing, just keep on trailing until you get taked out. Now, the focus is going to be on any move down are going to be those 1977s, which are going to be key. But right here, my positioning is really to sidelined, watch very carefully, tactically look for shorts, intraday, maybe see if that can get a bit of going, but definitely not trying to buy highs. Now, this will probably continue to try and grind higher, but I repeat, as we said in the past, the retracement would be healthy, and in terms of the way we look at the market, we much favor looking for tactical opportunities to get short intraday and see if that can pick up some steam and turn into something more. Even though we are definitely not interested in fighting flows, we're definitely not interested in being desperately short. This is still bid, and there's no point trying to stay in front of this. Let the central bank speak. Let's see what happens, okay? Now, in terms of crude, everybody was looking for crude to crumble. Now, if you look at it from a monthly, or let's look at it on weekly, we had a very important break to the downside. And the big question was, is this like a proper break, and we're going to get this starting to roll back down and get some traction to the downside to move down towards the 83s or the low 80s? Or is this just a bit of a false break on geopolitical news, on summer trade, etc., etc.? So right now the jury's still out. We'll have to see what happens. The way we were looking at this, we're looking at this base right here to go back up and test the 95 levels, and we've actually closed pretty strong here. So as long as we hold above here, we'd expect the market to continue to try to rotate higher and move back towards the 99 100 level, and that's going to be the next pivotal zone to keep an eye out for on the week. So pivotal zone to the upside, pivotal zone to the downside will be those lows. We'll have to see how this behaves, but we expect this to get some more traction and trying to take a little stab higher into that strong resistance. We'll have to see how this plays out, but right here it looks like we could see a bit more covering coming in from the short side. Now, What's happening on gold? A lot of people asking me about gold. I'm afraid I don't have anything too interesting to offer up on gold. The chart is the same and the outlook is the same. We keep on saying, you might wake up and this will be trading a bit below the 1300. You might wake up and this is trading a bit above the 1300. But bottom line, it's very, very choppy. There's not a lot of edge. It looks like it's trying to get some traction to the downside here. We would not be reading too much into the moves. Again, the healthy move for the market would be to see some kind of a correction sooner or later. We expect that to keep a certain bid tone in gold on the dip. So we'd expect this to stay pretty much in range 1350, 1300, 1250, but ultimately we expect this to try and rotate back to the upside, not to the downside. The jury's still out here too. I mean, the jury's still out on a lot of charts. This could get traction aggressively either side. I think you can make a case for a move in either direction at the moment. We're still favoring sideways to move back up. Even if you're looking right here, you could easily argue that this is holding very, very heavy. Some people are just, you could argue that this is still trying to rotate higher. Again, I don't have I can make a good case, I think, for either side, but just because of the way the market's trading, just because of the way we are here inside the range, because of the context, we expect sideways chop to potential to take a stab higher, or at least cyclically, not for us to be aggressively focusing on the downside. In terms of the Forex, what we have a lot of people asking about USD JPY. So no change USD JPY. We're looking for this to rotate back into the 104s, and that's exactly where we're hovering right here. Pivotal level for a move back into 105.40s or back down. Those 102.60s are going to be support. That's where that 200 DMA is going to be coming in. Right here, I mean, in terms of a longer term perspective, we're still completely in play. Those top side is a really interesting level, right? We've been looking at these longs for years now, right? And we were talking about that move back into that 200 on the monthly, that very aggressive move all the way back into that confluence zone of that 200 on the monthly and the descending trend line. And that's pretty much where we are, right? You could see all the aggressive breaks and it's holding a bit. It's going to be really interesting to see how we behave. Now, if we trade back above the 105.40s, call it 105.50s, this could easily squeeze a lot of players out again if we're trading above there, and we could see a very, very sharp acceleration. I mean, all things being equal, it would be healthy to see a bit of a pullback here for this to stay relatively in range, even though, structurally we're still long. But again, we're looking at these levels as pivotal to the upside 105.40s. We're here at the 04.10s and to the downside 02.60s. Again, you can look at the old recordings, but that's pretty much the way we're looking at it going into the week. The big question is, all this dollar strength are we going to see some profit taking as we go into all these central banks speaking, as we're going into Draghi, as we're going into non-farm payrolls? That's going to be the big question. So, expect to see a lot of chop, and don't forget that the real test or what's going to be interesting this week is not necessarily what happens intraday on Monday, what happens intraday Tuesday, even Thursday. It's how we close the week and how the market react on the Monday following this week. That's going to be really important, right, for the continuations. Now, in terms of Euro and cable, what's going on cable? So cable, we're holding. We've been on this chart for a long time, right? We were looking at all those longs for those moves back into 172s, 171.80s, and basically once we started retracing, we talked about the fact that it made sense to wait. It was a very aggressive move. It was time to see some of a healthy pullback, the market normalizing, and we expected it to try and come back. And the first pace we expected it to try and bounce was at this 50 DMA on the weekly. We had a multi-confluence zone here, and that's exactly where we're holding with a positive close on the weekly. So this is looking quite interesting here for potential rotation back higher. I mean, in terms of the way this trade is very, very pretty pure, very, very interesting from the long side. You see, once we got that gap down, as opposed to Euro, which stayed pressure on, cable caught a bid very quickly and filled that gap, and then on the move back down kept on finding bids and was unable really to attract new sellers at lows. And right here, stuck inside this whole range before the gap down, and here it's holding right now. So look at it early in the week. If it can get some traction early in the week, we could definitely see some more upside. But again, as I said, it's about how the week ends that really matters. But from the weekly, this is an important structural level because this could be a nice little base that's being put in for the next move and continuation back all the way into 71.80, 77s. Or if we end up closing the week back below, and then we would expect this to trade with a very heavy tone for a move back down into those 160s, 157 whole area. So it's a really interesting level to engage. There's been a lot of opportunities. We like the setup. We've been very active here. What's going on Euro? Euro. Again, we're focused on the weekly. So we had our Euro chart. We discussed all these levels, right? And we discussed that basically we expected it to stay pretty much in this area in summer chops. We're looking for this to try and muster a better attempt at bouncing here than it actually did. But our chart was the 135s with a big pivotal level. Then we had 137 where we said we need to get weekly closes above there to see strong pressure back up for the 140 test. And what we said is we could see a lot of wheeling and dealing here, but a weekly close below the 132.90s, this would be very, very heavy, right? Double arrow, these were the heavy areas. So right here, we closed the weekly before and we stayed heavy. Right here, this is clearly has potential to rotate all the way back down into the 30.20s, and a close below there would be very, 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 very heavy, right? Right now, it's a bit tricky to say going into the week. I think some people will be focused here on this dip coming in just a bit lower, pretty much at the 131. At this point, the way these trade is really once you're coming down to these levels that haven't been touched for a long time, you'll just hear people getting pretty excited, and there will be reaction pretty much at every round number, right? So now we're trading 131.30s. Next, if we stay heavy, next level to watch to see some protection coming in is the 131s. That breaks, it's going to be the 130.50s. That breaks, it's going to be the 130. But structurally here, there's really possibility for this to continue to come back down and trade below all the way into the low 130s. In terms of when are we going to get some pressure off, well, the only way we get a bit of pressure off in our book is if we get a weekly close back above the 132.90s, so call it pretty much the 133. Now, if you're looking at it on a shorter time frame right now, in terms of covering a river, don't forget that the gap is pretty much still open on that move down on that close here, right, further up. And the market did try and take a stab at popping back higher. And, as long as we hold this breakdown point, you see what happens. Bam, it holds here. It starts to rally off this support. Then, bam, gaps down. Previous support acts as resistance to the pip, smacked back down, right? So you see very, very technical. When markets has sharp breaks, they tend to be very technical for the nature of the volume and the systems trading it. And right here, so keep in mind that really to start to see some pressure off, we need to see price trading back above here. So basically taking out all the sell interest here. We need to have no more sell interest, or at least more buy interest here to trade this back up and to try and take that ramp up into the 32.90. So, I don't forget the gap down level clearly, but it's really going to be pressure on unless we really start to get some more aggressive buying coming here, stops hit, and a bit more of a squeeze. But definitely it would be healthy to see some kind of a squeeze, and it wouldn't be surprising to see some shorts taking profit before Draghi. But those are the levels we'll be watching this week, okay? So clearly, there's some interesting levels. Clearly, it's heavy. These markets can be a bit frustrating because if you're not in a trade, it's very difficult to get in a trade when they're trading like this. If you're trying to counter the moves, you're getting frustrated because you're not getting any sign of relief. But again, you have to keep in mind the context. You have to keep in mind what's going on. You have to keep in mind that we're still trading in summer months, so lower liquidity. We're going into month end. Now things should start to normalize a bit more. We've got a week when there's a lot of central banks on the wires. We've got a lot of data that could change perception of the market or the way market is pricing things. So we have everything lined up to have an interesting week, to have a week with more healthy moves, with more volatility coming in and more opportunities to engage. So that's what we'll be looking forward to. I wish you guys an awesome rest of the day wherever you may be. I wish you guys an awesome day off if you're taking the day off tomorrow, and if not, an awesome trading week. Again, thanks for listening. Talk to you guys soon. Bye bye, guys.